Welcome. So in this video, I want to talk about how much it really costs to switch to a Swiss bank account or transfer your assets to Switzerland. This is primarily aimed at Americans, USA, because there's certain compliance that Americans need to go through whenever they're opening an offshore account. And I really want to just compare it as well to alternative options, because there's a lot of rumours and myths online about opening up an offshore trust like a Cook Islands trust or a trust in the Cayman Islands or a trust wherever. How does it actually compare to just in your personal name and it's in Switzerland? So I was looking at every possible cost that is involved in it, and I was really weighing up the math to say, is it really worth it? Because there's a lot of hidden fees, and I was like, I'm determined to dig through and find them all. So ideally, if you're American, if you're not American, you can still watch it because it still just tells you how much it costs. So Swiss account. So I've imagined in this scenario, someone transfers like $1 million or however much it may be and wants to borrow a Lombard loan. Yeah, so let's look at it. Now, they do offer very competitive rates as far as the interest. So think of like the Fed fund rate plus like a spread of like 0.5% or whatever it might be. So it sounds really competitive, but you're not getting free money. You're not getting free money because they make up the money somewhere else. So I'm going to run through the cost and the friction, and is it worth it? You'll be able to know. Right, so first things first, we completely cut out the asset under management fees. We don't need advice, we just want your infrastructure. So we only pay the custody fee. Usually it's negotiable. Or maybe if it's not negotiable, the broker has to speak to different Swiss banks and find out who's got the lowest. So whatever it is to bring that down, because we want to bring that down. But there's something I'm going to come back to later on the custody fee, because there's a good way of looking at it, and I'll talk about that. So of course you're taking a loan out, and there's going to be a broker fee without question, because you're going to get this broker to find the Swiss bank and do negotiation on your behalf. Think of them as a financial mercenary. So let's say 1% of the loan amount. So you borrow 500k, and what hits your bank account would be like 495k or whatever the difference is, yeah? 990k, that's how it works. So they're going to pay it one way or another. Maybe they just pay it as a fee, or they take it off the loan, one way or another. So got to consider that. Swiss stamp duty, 0.15%. Okay, execution transaction fee. Now, I want to know what I'm thinking, what I've put here this, because there's two ways that can mean two things. Because see, if you're buying and selling stocks with a Swiss bank, it's going to cost a fortune. We don't use it for that. We use it like a vault. Because if you're going to just buy and sell stocks, you might as well just use your own brokerage. It's far, far, far cheaper. However, here's something that's important. Depending on your stock portfolio, you'll get charged per ticker symbol. So if you've got a portfolio of 50 stocks, you're going to get charged boom, 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 50 times, like $100, $100, $100, $200, $200. Listen, if you get 50 stocks in your portfolio, what are you doing? What are you doing? You might as well just have an ETF. I hope you don't have 50 stocks, right? Concentrated portfolios, I like, depending on who you are, 5 stocks, 10 stocks, 10 positions. That can include an ETF. Outgoing transfer fee, that's probably referring to leaving. Or that could refer to, that's probably referring to transferring out. Here's the big one though, US person, FATCA surcharge. Right, okay, anyone in the banking industry knows this, what FATCA is. Foreign Account Tax Compliance Act. When I was in the bank, when you got a US customer, they felt like they were being interrogated, because they pretty much were. Now, it's not Europe that are doing it, it's not the UK that's doing it, it's the IRS, it's America. They basically told every other country in the world, listen, anyone from America, you must report them or else you're in trouble. So it's not the Europeans that are doing it, it's the IRS. If you're American, you can't escape the IRS, nor do you want to. So you're going to get charged for that, because retail banks, probably some of them, won't even take on American clients because it's just not worth the cost, because you need to hire people and do more compliance. But private bank, because you're more valuable, so it could be worth it because you're paid. You're a big client. You're going to be a long-term customer. Yeah. So annual foreign reporting, 1,500, and they're going to want you to keep some cash in the account. Maybe 10,000, maybe 25,000. That just sits there. Does that get interest? I don't know. Does it? It might sit and get nothing, but that's there to cover small amount of fees and things. Okay, here this is talking about, why don't we just borrow money in like Swiss francs? Because it's like 1%. Someone had a comment, a video, it was really interesting. They said, why do we borrow, why are we borrowing US dollars when we can just borrow a Swiss franc at 1%? Doesn't that seem like an obvious deal? Because look how much we would save. We would save 17 grand a year, right? If we're borrowing in Swiss franc, because it's so cheap. Why are we borrow US dollars at 4.4%? Yeah, seems obvious in the front, but it's a trap. It's not a trap, but the golden rule, we always match the liability to the asset. The Swiss franc is a safe haven currency. It's a currency of strength. Yeah, because if you're borrowing that currency, you're shorting the currency. Why are we shorting the strong currency? I want to short the currency that's getting printed at 7% a year. I want to short the currency that's got a $40 trillion sovereign debt crisis. Why am I shorting a strong currency? I'm not going to short the hard currency. I want to short the dollar. So match the liability to the asset. Don't worry about borrowing Swiss franc. Just borrow, and whatever the thing is your stocks are, and I'm assuming they're all going to be US stocks because that's where the growth is. Anyway, right, friction, big friction, major friction, FATCA compliance. Right, this is the price of admission you need to pay if you want your offshore Swiss account with your asset protection. It's like, okay, you're not getting credit checked because it's an asset-backed loan, but the IRS are wanting Switzerland to do all your verification, certification, passports, address, tax compliance declaration, right? All these forms, we hate it. Of course we hate it. Who likes it? No one. But you have to do it. So at least you're being prepared for it, knowing that you're going to get hit with it. So IRS form W9, secrecy waiver. Yeah, that's because the Swiss banking is obviously secretive, but you have to waive that because you need to report it to the IRS. And golden rule is tell the IRS. Do you know what? See, the asset protection, it comes from being transparent. That's where you get it all from. If you hide stuff offshore, you're giving someone leverage over you. Someone could use that as leverage. So you always are transparent. Bank reference letters, CVs, PIP disclosure. You know, you get the point. KYC, boring stuff, but it has to be done. Right, source of wealth. So they're not credit checking you, as I said. They're not asking you for they're not assessing you, like what's your credit score. They're just doing this all for the IRS. That's it. AML compliance. They have to do it. So they're going to want tax returns. 3 to 5 years potential US tax returns. Brokerage statements. Now, the brokerage statements is useful because, remember, in the world of wealth, it's not about someone's credit score, it's about their portfolio. Their portfolio is the proof of competence. The portfolio shows if you're an educated investor, and that's leverage. Because imagine the broker phones up the bank, the Swiss bank, and says, listen, this client is well educated. They fully understand the buy, borrow, die game. They're going to hold these assets and never sell them and borrow Lombard loans against them for the next 50 years and pass them on to their children. So this client, the lifetime value of this customer, you do the math. But really that could all just be talk. How do they prove it? The proof is in your portfolio. The portfolio, the brokerage statements show that. Look, this client didn't even budge during 2022. This client didn't even budge during COVID crash. look, they just held like an iron rod. You get it? That's leverage. They just want to know where your money came from. Business sale contracts, real estate deeds, inheritance gifts, all the usual stuff, right? But at least you know in advance this is the friction you're going to experience. But you're going to get this with any offshore account, no matter what you do. So if you want a Cook Islands Trust or something else, you're going to have to do this anyway. Anything offshore, you're going to have to do it. But this is where the protection lies, because you do it once. You do this once and job done. Okay, you've got your offshore account. I factored in, including the Swiss VAT, roughly how much it costs. Okay, like obviously this depends on negotiation. It depends on the Swiss bank. If it's a small bank, big bank, how much you're transferring, all that depends. But I roughly estimated here, yeah, based on the AUM amount. $5 million, you're looking at 22 grand per year. The annual running costs. I threw in some miscellaneous costs. Right, so relationship fee. So that might be, okay, if there's a small asset you're transferring over, instead of them, they'll charge a flat fee instead of a percentage, whichever is greater, depending on how much you're sending over. Credit line commitment fee. So if it's getting unutilized, they'll maybe charge you because you're not using your Lombard loan. Dividend processing fee, small fees for that. Wire transfer fees, yeah, if you're ever transferring money from the Lombard loan over to your account. Account closure and termination fee. Well, hopefully you don't do that. But if you did, 1,000 Swiss franc. Yeah. Okay, so something else to consider. You're going to need a very competent accountant in America because your CPA has some special paperwork they need to do. So they might charge you more because they've now been given more liability. Because if they don't file the paperwork, big problems, major problems. Look at these problems. Penalty multiplier, 500 per fund per year. Yeah, so I've put in here, I've estimated like extra cost to the CPA. You're talking maybe an extra $1,500 a year because they need to file FinCEN form, FBAR form, IRS 8938, FATCA, and Schedule B. Yeah, so you have to file all this paperwork. So get a good accountant that's going to do it. But honest mistakes, they charge, what's that, 16,000 a year, 10,000 a year. It's just fees, right? You get the point. Fees and charges. The big one is if it's willful, intentional, and reckless. They take half, basically 50% of the account balance. Right, game over straight away. FBAR, willful penalty. So if it's on purpose, it's game over, right? Just the whole point of it is being defeated. And in big bold letters right at the bottom, the asset protection comes entirely from declaring the account openly to the IRS. That's the whole point. But you get the protection by being transparent. That's what the great thing is. Right, so the way I look at it, I'm weighing it up and I'm saying, look at all these fees and friction. Is it worth it? If you're truly a buy, borrow, die investor, I would say yes. Because the fees, these initial setup costs amortize over 20 years to negligible amounts. And the way I look at the custody fee, okay, I would say this. Let's say the custody fee is 0.35%. I would say if there was a greater chance than 0.35%, someone's going to file a lawsuit against you, or a creditor's going to come after you, someone's going to come after you, then yeah, it is worth it. Is there greater than that chance for peace of mind, sleep like a baby, knowing that those assets cannot get easily attacked? I'm not going to say it's impenetrable, right? No asset protection is against a judge. If a judge really decides, okay, they can just hold you in contempt and say, yeah, I can't control the Swiss bank, but I can control you, so I'll throw you in jail until you release the money. Right? You can't stop that. But I would say this is far superior to an offshore trust in every way possible. In fact, my honest opinion in an offshore trust for asset protection, let's be honest, right? This is the honest truth. You're setting up a Cook Islands trust for one reason and one reason only. You want the asset protection and you want to use it for your own personal expenses. You want your cake and eat it as well. That just isn't going to happen in reality. And you know what it'll cost to set it up? It'll cost like 100 grand, 50 grand to 100 grand to set up. You'll do all this compliance anyway. You'll pay more for an irrevocable offshore trust, and a judge can just pierce it anyway. If there's any single bit of evidence to show that you are using it for your own piggy bank, they just pierce it anyway. So what is the point? If you're using it for its intended purpose, you might as well just have a domestic trust that does the exact same job and is impenetrable. Yeah, people read the quote, the Rockefeller quote. What is the quote? Own nothing or control everything. Yeah, you've seen the quote. Everyone reads it and doesn't realise that he literally owned nothing but because he threw it into the trust and never saw it again. That's the way a trust works, like an irrevocable trust. Throw the assets into the irrevocable trust, wave goodbye to them, and you write the bylaws, so you control it because you wrote the rules to the children and the great children and the great grandchildren, and that's it. It's untouchable. No one can come after it. It's truly impenetrable. And why? It doesn't need to be offshore. Why is it offshore? Yeah, you're getting an offshore trust because you want to use it as personal piggy bank. It doesn't work. I've ran every simulation possible of how it can be done, and the asset protection lawyer will smile and say, well, you can be an employee of the trust. We can use the spouse to get the money. The trust can give you a loan. I've ran it all, and I've just came to the conclusion. A judge uses complete ruthless common sense, absolute common sense. If they see one benefit, you benefiting from it in any way, they just say it's a sham, it's an alter ego, and it's pierced. Bring the money out of it. And if you just say no, they say, right, you're in contempt, in jail. Doesn't work. What's the point? Swiss Vault, however, it's in your personal name. There's nothing to hide. Yes, you get asset protection because it cannot just be easily. It's protected against 99% of creditors, aggressive creditors anyway. Okay, 99%, because I always leave that 1% for divorce. Okay, that's just really nothing beats that. But we combine this with tier 1 institutional insurance, liability insurance. Big institutions like Chubb, is that how you say it? And AIG as well, I think. They're very surprisingly cheap, like up to $10 million insurance, I think, maybe more. And it's like, what, 2.5K, 3,000 a year? Depends on your occupation, depends on your are you high risk or whatnot. Yeah, that just depends, you know, because that's another thing you need to consider. Like, if you are like W2 employee, not very liability, you know, if you're like a surgeon or something, you could be high risk, you know, someone might come and try and sue you, so then you would be like, okay, this makes sense. But maybe if you work a job that just no one's really going to come and sue you, maybe you don't need this. The insurance would be enough. Yeah, the insurance is like the first line of defense, because here's another point I made in my trust video. An offshore trust does nothing for the legal fees. So yeah, I've got a Cook Island trust, brilliant. Someone sues me. Okay, I need to hire a lawyer, I need to pay for legal fees. So the trust did absolutely nothing for that. More money down the drain. Whereas at least the insurance has a duty to defend. So you get the full force of that insurance company's legal power, because they don't want to pay $10 million out, so they're going to fight for you aggressively and ruthlessly. So you have that as line 1 of defence. Serious line 2 defence can be the Swiss bank. Definitely. So it's definitely possible for the right people. If you plan on throwing the asset in there and having a portfolio which is to never be sold, and you're educated. Education is your leverage, because do you know what? The real barrier to entry for a lot of these Swiss banks and brokers, the real bottleneck for them is educated clients. Because think about all the education they need to do. They need to convince a client not to be scared of a margin call. They need to educate them on buy, borrow, die. That's friction for them. Imagine you just show up and you're saying, look, I know the game. I know how to play the game. I know what's expected. I am going to leave this here in the vault for 20 plus years. The children will get it. I'll borrow Lombard loans to get it, give me good rates, and I'll use that for further investments. So it's worth it for some people. But at least you know what to expect, because you know what? There's nothing worse than, you think you're getting something and you get all this you get hit with all this paperwork and you weren't expecting it. But at least now I've covered at least as much as I can find. I was digging for every detail I could come across. So there you have it. It's up to you if you want your offshore Swiss vault for asset protection and Lombard loans. There you have it.